Welcome back to the channel. I hope you're feeling happy and healthy, ready for another massive video after yesterday's CPI announcements. What is to come in the next 24 hours? Where does this leave the S&P, the US dollar continuing to collapse, and Bitcoin pumping above the previous resistance level, the old support of 17,600. Let's see how all of this data in the macro view is coming together over the next week to end of December. Make sure you have liked the content, subscribe to the channel, do those things down below, make the little buttons dance and give their little firework displays. Guys, thanks so much for all of your comments as well. This time in the market is the absolute best time, in my opinion. Being at the lows means we have only the best people here on the channel. So just a huge shout out to you guys for your comments and continued support here on the channel as well. All right, enough said there. Let's have a look at what happened yesterday with the CPI. Things have been going well and truly on track here for the rest of this content on the channel. We had the CPI data come out. It was expected around 7.3. That's the forecast. The actual was 7.1. And of course, it wasn't any sort of rocket science. If we were to get a lower reading than what the forecast was, this would send markets into exuberance, having a little bit of relief from the old bear market. However, looking at the S&P, which we'll get to, there are some warning signs to look out for, at least in the short term. So I'll show you exactly what that is, what those price levels are, and why, okay? So for the CPI, it's under. The core CPI has also come out under as well. We've basically gone back to the previous period about 6 months ago through June and May, and then back in January as well, we're at around 6%. So core is down. The CPI is also down. The inflation rate is basically as low as it was 12 months ago. So that's a good sign. And you're probably going to see happy dances from the Fed coming out saying that they've done a whole lot of great work here in the economy to reduce inflation. But remember, they're the ones who pumped up inflation in the first place. They printed trillions and trillions of dollars and held everyone back for 2 years, locking people down through ridiculous means from the government. They're the ones who created this. They're going to be the ones that pat themselves on the back. We're the ones who are going to have to pay the price in the years to come. All right, so that is part of what goes on in the economy. I'm not happy about it. I'm sure you're not happy about it either, but this is what we have to live with. And the reason why we're here is to make money from this situation, as this is an investment channel and not some sort of emotional support channel. If you're looking for that, probably in the wrong place. We want to make money from these markets because we understand what the government is doing and how they keep screwing over the economy. So we've looked at the core inflation data that has come through. The next thing we're looking for within the next 24 hours is the federal funds rate, which the expectation is at a 0.5% rate hike. We're currently sitting at 4%. The expectation is 4.5%. And you can see after yesterday's inflation figures that were lower than anticipated, we can now see that a lot of the momentum has swung to the 0.5% rate rise rather than the 0.75%. Now, of course, yesterday it was still more in favor of the 0.5%, but you can see how much it swung more in favor of the 0.5%. We went from 73% to 83%, and there's far less people thinking it's going to be a 0.75%. Now, has that changed anything next year? Not really, not really. So they're looking at potentially after this 0.5%, maybe we get a 0.25% rate rise, and then following that into March, May, June, potentially another 0.25% rate rise, where we'll probably top out at around 5 or 5.25%. And so if this all continues to go to plan, you can almost expect the stock market to continue to rise in the macro over the many months. We're not trying to say that the next day is going to pump and the next week is going to pump and it's just going to be a straight line up. That's not how the markets work. But over the period, this is exactly what we've been looking at since June. Remember that. You know, this was the June low back here. We had a rise up into August. We had a fall again into October, which may be the cycle low. And I continue to emphasize this because you can barely find anyone online to talk about the cycle in this sort of sense. We're looking specifically at cycle low zones, looking at timing of a market. And this is very unique to what we do here at TIA. And if you want to learn more about this and be involved with the community, go and check out the link in the top of the video description. This one's absolutely free. It's tiacrypto.com/subscribe. That's for our fortnightly, our every 2-week newsletter to stay up to date with Bitcoin, real estate, which is the major cycles here, and of course, DeFi and stocks and everything else going on in the economy, more so than what we're talking about here on the channel. So definitely go and check out that link above. Stay up to date with what's going on. This so far may be a bit of a trading range going on here. While the rest of the world is calling for financial collapse, going to be extremely tough times in 2023. If you've been following us here, you know we have not looked at that whatsoever. We have said that 2022 is going to be a tough year. The market so far has come back to the exact 50% level, which you saw that we threw here back in January. So you had the bottom to the top. The 50% level right here is at 3,500 points. The market has bounced off that. So this essentially means if we're able to hold this level and start to climb a little bit higher over the next few weeks, this could be that cycle low point. This is a very good area for support in a market on a 50% level, especially in a macro time frame like this particular chart here, which spans over the course of years, not just a short term, but over years. Now, of course, just to mention to the downside, anything below that level, even to 3,200 points, is still within my macro support here on the chart. And from the October low, we are now up 15%. So this market has rallied relatively well up to 4,000 points. Now, the short term here, we are seeing a bit of a topping out pattern and a double top. So this is on the daily chart now. So going from that macro view to the short term view, just so that we can stay in front of the news headlines and some of the fear that can be thrown around in the news. So we do have a short term double top here. If it is to play out over the coming days to weeks, so still short term, some sort of likely target I would look for is first 3,900 points to retest the low, and then around 3,800 points. So 3,800 points is this level right here. This is the 50% level between the low and the current highs, and it's also a 150% move from the top. So these are good target areas for this market to fall and still hold up a bullish pattern. If you start to break down and get further below 3,600 points, I'd be very, very concerned. But this is a good area that you would expect markets to come back and test, especially off a short-term double top, and then look to recover and potentially break out. Now, this is just the first day of it. Doesn't mean this is going to happen tomorrow, the next day, or next week. That's what I'm looking out for in case, because this is a rejection pattern at the moment. But if we get some good news on the inflation, potentially we hold out here and then break above this level to finally break the bear market downtrend. As you can see, we've just touched it again on the log. We're getting awfully close to it as well, and hopefully break past the 4,200 level. This is the next key bullish flip target for the S&P. Where does this leave the rest of the market? Well, the US dollar, as I've pointed out for nearly 3 months now, is continuing its decline, its collapse from 115 down to 104. Eventually, this has to go on a rally. We have to get a bear market rally in this particular move down. It happens all the time. It's absolutely natural within a market. And what we've been counting on is approximate 2, maybe 3 or 4 week rally against the trend. The trend is down. You can see that right here. We're right down. What's happened in the past in a bear market, this is the bear market of 2020, we had 1-2 weeks to the upside with another week just holding out in a similar price range. Again, we had 1, 2, 3 weeks. The market continued to collapse. And then we had more weeks up as the market started to flip and turn to the bullish side. This is what is meant by bottoms taking time. You can see that one of the lows was put in here in August. You had another low in January and then a final low in May. That's a pretty long period for a bottoming process to occur. And then the market turns and heads off to the races from that point. And so we're into our 11th week down now. In the past, we had a max of around 15 weeks before we started to turn. And at the beginning of this bear market, it was 12 weeks. So maybe we see a reversal late this week or sometime next week, and we finally get that first little bounce out. Either way, we're almost pretty sure that this is one of those significant tops like we have seen in the past for the US dollar, going back to 2002 when the market eventually topped out. As you can see here, we had 1, 2, 3 tops over the course of about 15 months, and we head down to this extreme collapse. The October peak, as it's pointing out here, that's basically the stock market peak. That's why we're so interested in what the US dollar is doing, because a weakened US dollar is going to be strong for the S&P. We expect the S&P to continue going up. If we get stronger moves in the S&P, then that leads us over to poor old little Bitcoin, and we can start to throw some risk on assets into the portfolio. If people are feeling positive about the world, or at least in the markets, not necessarily the everyday lives of the average person, but the market is going up, then people have a little more money to go and throw around and risk their money in risky markets like cryptocurrency. Yes, those markets are extremely risky. We're down 70%, in some cryptos 98%. They're very, very risky markets. And so what we've seen over the short term for BTC is a break back above 17,600. This is a very important level. It was the June low. And of course, if we can start to consolidate above this level, this is going to be good signs moving forward to try and get back above the next level of 18.6, and then eventually take out some of the monthly swing tops, which are those key bullish flip targets for the macro to flip bullish for BTC. First, if we look at our swing indicator here, you guys can access this swing indicator. Link is in the video description. TIA GAN swing indicator. The monthly swing, the first one is sitting at about 21,500. So that's this little peak here. And then the next one up is at 25,200. So these are some of the levels we've been following for quite some time. I know a lot of people are still waiting for $10,000 Bitcoin. At this stage, if we're able to close back above 17.6, it's getting very unlikely you're going to see a 10K. And more importantly, if we get back above around 21,500, could basically kiss that 10K Bitcoin goodbye. Those guys are going to be absolutely screwed and upset that their targets will never hit. And then you start to see that flow-on effect into the market of more money coming in, thinking that they're never going to see their price again. Generally, that happens a little bit further up in price. They're still not willing to concede that their 10K is not going to be hit, and they will wait until that level's broken, the next level's broken, and then we start to get back above some real major resistance levels. That's when you start to see the market move a little bit quicker to the upside. You can see it in basically every single past market movement. They're waiting and waiting and waiting, and then it's all too late towards the end of the cycle. This is by no means to say that the Bitcoin bottom is 100% in. We will not know that until many months after the fact. But there are a lot of signals that are leaning towards the Bitcoin bottom being in, as we've been through many of the some of the fundamentals today, looking at the inflation data. Tomorrow, we've got the interest rate announcements coming out. And like we've seen in the past, this often leads to a little more bullish in the S&P. You start to put all these pieces of the puzzle together with the US dollar also collapsing, or basically going down, then you can start to see why this might take another 6 to 12 months before we start to see a little more momentum into BTC, along with BTC's fundamentals of timing in the market. You can see that we've come up to basically an exact repeat of the previous cycle so far. And should we go down and test a new low level at 15 or 14,500, then it's almost still within timing of the previous cycle, around 411 days to the downside. We're also looking at the halvening timeframes from the next halvening to the low, and you can see that they came out on pretty good timing. So the blue line is the halvening, you got the low here. So there's a lot of timing factors that are coming together for this particular low, a lot of price factors that are coming in. Yes, the low at the moment for Bitcoin is much less, well, the drawdown from the Bitcoin high to the current low is a lot less than previous cycles, but it's still within a reasonable range to expect a low. It's 77.5%. The previous cycle was 84%, and the cycle before that was around 86%. So it is an evolving market. We're not expecting it to have a drawdown of the exact same as the previous markets when it was in its infancy. But for now, it is looking like it is trying to rally along with the S&P based off of some of these news announcements that are coming out. However, if you've been following the time cycles, this is exactly what we had been anticipating as a potential low. I'm not trying to call the exact low, but we're trying to act on our understanding of the market cycles. So as a wrap on the S&P, leading into the interest rates announcements in less than 24 hours, short term, maybe this is a double top. If we break this level here, 3,900 points, probably expecting another 100-point drop from that level there. If it's able to hold out over the next 24 hours to 48 hours, maybe we'll start to see a final attempt to break out of this bear market downtrend and then give us that bullish flip target. Our first one, we need several of them, but this is a very good start. And that level is at 4,200 points. So ideally, we want to see the market get above that, hopefully within some sort of Santa rally leading into the end of the year. Maybe the interest rate news is what is going to get us there. But overall, the macro has been standing up. You guys have also been showing your support here on the channel with your comments. So thank you once again to all of the support. Check out the videos that are popping up on the left-hand side here. These macro outlook videos of late have been excellent. Thanks for putting these out. You are most welcome. And don't forget to subscribe to our free newsletter. Link is in the top of the video description. Like and subscribe. I'll see you guys at the next one. Till then, peace out.